Good evening and welcome back to the Red Spills channel, where we discuss issues and trends facing the oil and gas industry. If you are new to the channel, kindly like, subscribe and share to stay updated with the current trends. We have with us today Pranav Kant, a seasoned expert in the oil and gas industry. Welcome back, sir. How is your weekend going on so far?
Thank you, Yukta. Thank you for having me on the show. And the weekend has been interesting with a bit of travel. So that's why the revised timeline. So here we are.
Yeah, sir. Yeah. All right. So, starting off with my first question for you, crude markets seem to be unsure of the future directions as recession fears seem to have balance with OPEC Plus planning 1 million barrels per day crude cut. What are your views about this, sir?
Yeah, crude markets are poised very, very interestingly with the latest round of information coming about the proposed OPEC cut in their 5th October meeting. Now, this meeting is interesting in the sense that initially it was planned to be an online meeting, and then later it was decided to have an in-person meeting, and it increases its importance in the sense that in such a short notice in-person meeting, which means they are serious about it. About the agenda of the cuts, which is supposed to be on the table. So, yes, markets are right in terms of anticipating it as a bullish signal for the prices. But I guess it's a little bit more complex than that. When we look at the actual production from the OPEC Plus members, it is only the 4 members who have largely the capacity to increase the production in any meaningful way. Cutting the production, yes, everybody has, but it's a little bit more, if I may say so, complex, because the 4 key states, Saudi, UAE, Iraq, and Kuwait, with significant spare capacity, they can afford to cut. But I'm not entirely sure at this moment whether the rest of the members can really afford to cut. Because recall, the OPEC Plus members have to manage their economies and their budgets. And so the capacity to cut it not very evenly spread out between the various members. So it's going to be interesting as to how things would be. Markets are saying it could go up to 1.5 million barrels per day. But I guess those would be extremely optimistic expectations. I would imagine it to be a little bit more moderate, something like 500 KBD. But we'll need to wait and see because we cannot speculate much as to the level of the impending cut. That is on one side. Second side, what are the bearish factors weighing on the market? First and foremost, the US dollar index, which continues to strengthen, causing lots of inflation to be exported to the rest of the world. So that trend does not appear to be winding down. It appears to be strengthening. So it remains bearish for the economies and the market. Europe is undergoing a mini crisis, if not a full-blown crisis, and the expectation in the near term are not looking great. China's kind of little bit improvement is, I guess, marginal at the moment. Understand that it will be the first time in 20 years that the China's crude production and import and consumption would be declining. First time in 20 years. So there are more of bearish factor which the OPEC Plus is trying to manage through its proposed cuts. So we need to wait and see. I would not be extremely bullish on the scenario. We need to wait and watch. It's unlikely that crude currently in the mid 80s, we are talking Brent here, which is currently at 85.12, would suddenly jump up to 95. We are not anticipating that. Little bit of upward movement, yes, but we still see it to be remaining in the 80s in the next week.
Okay, so we shall wait for the next week what happens.
Yes.
So moving forward to my next question, how will the new developments on the Russia-Ukraine front affect the energy prices in general?
Yes, this is something very serious, and we need to look at it a little bit deeper, because if we go back to January and February of the year, remember that the conflict began on February 24th, but the noise around the impending conflict had started gaining stream from November 2021 onwards, where the prices were at $70 to late 80s. So from there, it started inching up, and after the February 24th commencement of the conflict, it really shot up and went to 130 plus. And subsequently, it has been coming down. The main reason that the prices went up was the fog of war. And markets anticipating a significant impact on the Russian crude and oil production coming to the market. People were anticipating something kind of 3 to 5 million barrel per day supply getting cut from the market, which obviously did not happen. Now we are looking at an escalation in the conflict arising from the referendum which the Russia has completed in the 4 regions of Ukraine, and the kind of noises which US, Europe, NATO members, and Russia are making in terms of escalation of conflict. So it might be very bullish for the markets in terms of adding to the risk of the supplies coming in. And at the same time, this is coinciding with the oncoming escalation of sanctions, because sanctions have been a staggered process with 7 rounds of sanctions announced so far, and they kick in at different time intervals. So from October and November and December, where it really tightens further and further. So all these things are leading to kind of speculation which is unclear at the moment, but markets have a way of finding its way. As we saw in hindsight, that Russian supplies, they nearly got rerouted. So they did not disappear, they did not get impacted, but the supply chains got more innovative, so to say. So that's why the supply to the market did not come down. So we expect actually more innovation in the supply side management by Russia and other players. So we do not foresee any immediate further tightening onto the supplies of Russian crude and oil products. So, but it would weigh down on the market in terms of it sends a clear bullish signal. So the tempered price impact, which is currently what we are seeing, would perhaps get a minor boost by the impending escalation in the Russian-Ukraine conflict.
Okay. Again, as always, you have shared some really great insights with us. I'd like to thank you for being here with us. It was a pleasure talking to you.
Thank you so much. It has been a pleasure. Yeah.
Thank you all for watching. Kindly continue to show your support by liking and subscribing to our channel. Stay tuned for more.